Understanding Cryptocurrency, Digital Money Explained. In this chapter, we will dive into the world of digital money and explore how it works. Cryptocurrency is a digital form of money. It exists only online, without any physical form like coins or banknotes. Think of it like virtual cash, but with some unique properties that set it apart from traditional money. You can use it to buy goods and services just like regular money. Many online retailers and even some physical stores accept cryptocurrency as a form of payment. But here's the difference. Cryptocurrencies use cryptography for security. This means that advanced mathematical techniques are used to secure transactions and control the creation of new units. Cryptography is a way to protect information and transactions, ensuring that they are safe from tampering and fraud. This makes cryptocurrencies very secure. They are also decentralized, meaning they operate on a technology called blockchain. This means they are not controlled by any government or financial institution. Instead, they rely on a network of computers to verify and record transactions. So, instead of using banks, cryptocurrency transactions happen directly between people. This peer-to-peer system allows for faster and often cheaper transactions. This is peer-to-peer digital cash, enabling users to transfer money securely and efficiently without the need for intermediaries. The power of blockchain, securing transactions. Cryptocurrencies use a special technology called blockchain. A blockchain is like a digital ledger. It keeps track of all cryptocurrency transactions. Think of it like a giant public book. Everyone on the network has a copy. This makes it very difficult for anyone to cheat the system. Every time a transaction is made, it is recorded on the blockchain. This creates a permanent and transparent record. This technology is what makes cryptocurrencies secure and trustworthy. Bitcoin and beyond. A brief history of digital gold and other cryptocurrencies. Bitcoin was the first cryptocurrency. It was created in 2009 by an unknown person or group using the name Satoshi Nakamoto. Bitcoin is often called digital gold because it is scarce. There will only ever be 21 million Bitcoins. Since then, thousands of other cryptocurrencies have been created. These are called altcoins. Some popular altcoins include Ethereum, Litecoin, and Dogecoin. Each cryptocurrency has its own unique features and uses. The allure of crypto advantages you should know. Cryptocurrencies have been making waves in the financial world, and for good reason. Let's dive into the key advantages that make them so appealing. Cryptocurrencies offer several advantages over traditional financial systems. Asterisk decentralization. One of the most significant benefits is decentralization. Unlike traditional currencies, cryptocurrencies are not controlled by any government or institution. This means that no single entity has the power to manipulate or devalue the currency. This gives you more control over your money and financial decisions. Asterisk security. Another major advantage is security. Blockchain technology, the backbone of cryptocurrencies, makes them incredibly secure. Each transaction is encrypted and recorded on a public ledger. This makes it nearly impossible to counterfeit or alter transactions. Asterisk lower fees. When it comes to fees, cryptocurrencies often come out on top. Traditional bank transfers can be costly, with various fees eating into your funds. Cryptocurrency transactions, on the other hand, often have significantly lower fees. This is because they cut out the middleman, streamlining the process and reducing costs. Asterisk speed. Speed is another area where cryptocurrencies excel. Cryptocurrency transactions can be much faster than traditional bank transfers, which can take days to process. This is especially true for international transactions, which can be completed in a matter of minutes rather than days. Asterisk accessibility. Finally, let's talk about accessibility. Anyone with an internet connection can use cryptocurrencies, making them accessible to a global audience. This inclusivity is particularly beneficial for people in remote or underserved areas, providing them with financial opportunities they might not otherwise have. Cryptocurrencies truly offer a world of advantages. Section 5. Crypto goes global: impact and acceptance. Cryptocurrencies are becoming increasingly popular around the world. More and more businesses are starting to accept them as payment. You can now use cryptocurrencies to buy everything from coffee to cars. Major companies like Microsoft, PayPal, and Tesla have also embraced cryptocurrencies. This growing acceptance is having a significant impact on the global economy. Cryptocurrencies are creating new opportunities for investment, innovation, and financial inclusion. Section 6. Governments and CBDCs, adapting to the digital revolution. Governments are also taking notice of the rise of cryptocurrencies. Some countries are exploring the possibility of launching their own digital currencies. These are called central bank digital currencies, or CBDCs. CBDCs are different from cryptocurrencies like Bitcoin because they are issued and controlled by a central bank. Governments see CBDCs as a way to modernize their financial systems and improve efficiency. Section 7. The volatile landscape, navigating the ups and downs. It's important to remember that the cryptocurrency market is still very young. It can be extremely volatile. The value of cryptocurrencies can fluctuate wildly. This means you could lose money if you're not careful. It's crucial to do your research and understand the risks before investing in cryptocurrencies. Never invest more than you can afford to lose. Cryptocurrencies are a high-risk, high-reward investment. Section 8. The future of finance, cryptos, potential and challenges. Cryptocurrencies have the potential to revolutionize the way we think about and use money. They are not just a new form of currency, but a groundbreaking technology that can transform financial systems globally. They offer a glimpse into a future of decentralized and digital finance, where traditional banking systems could be replaced by more efficient, transparent, and accessible financial services. However, there are still challenges that need to be addressed. These include regulatory issues, scalability problems, and the need for widespread education. Regulation. Governments around the world are still grappling with how to regulate cryptocurrencies. The lack of a unified regulatory framework creates uncertainty and can hinder the growth of the crypto market. Clear regulations are needed to protect investors and prevent illegal activities. Without proper guidelines, the risk of fraud and misuse remains high, deterring potential users and investors. Scalability. As more people use cryptocurrencies, the networks can become congested. This congestion can lead to slower transaction times and higher fees, making it less practical for everyday use. Solutions like Layer 2 protocols and sharding are being explored to address these issues, but widespread implementation is still in progress. Education. Many people are still unfamiliar with cryptocurrencies. The complexity of the technology and the rapid pace of innovation can be overwhelming for newcomers. More education is needed to help people understand how to use them safely and responsibly. Educational initiatives and resources can empower individuals to make informed decisions and participate in the crypto economy confidently. Section 9. Conclusion. Cryptocurrencies and the evolution of money. Cryptocurrencies represent an exciting new chapter in the evolution of money. They offer a glimpse into a future where financial transactions are faster, cheaper, and more accessible. While there are certainly risks involved, the potential benefits of cryptocurrencies are undeniable. As with any emerging technology, it is important to approach cryptocurrencies with caution and a healthy dose of skepticism. However, by understanding the basics of this revolutionary technology, we can position ourselves to navigate the exciting future of finance.